Top 3 Dividend ETFs for August 2023. Want your piggy bank to grow overnight while you sleep? In this video, we will introduce you to 3 high-performing dividend ETFs that will grow your piggy bank as you sleep and help you achieve financial freedom with easy passive income. So, what exactly are dividend ETFs? Dividend ETFs, short for Dividend Exchange Traded Funds, are investment funds that focus on holding a diversified portfolio of dividend-paying stocks. These funds aim to provide investors with a steady income stream by investing in companies that regularly distribute a portion of their profits to shareholders in the form of dividends. Dividend ETFs offer a convenient way for investors to access a basket of dividend-paying stocks without the need to manage individual stocks themselves, making them an attractive option for those seeking regular income and potential long-term growth. Now, while there are many great dividend ETFs to choose from, we narrowed down our choices to these 3 ETFs based on low expense ratios, relatively generous dividend yields, and high-performing 10-year annual returns. If you're new to dividend ETFs, an expense ratio is a way to measure a fund's operating expenses, and it's shown as a percentage. It tells investors how much they'll pay each year to own a mutual fund or ETF. These expenses cover various costs like marketing, advertising, and managing the fund's portfolio. For instance, if an ETF has an expense ratio of 0.20%, it means the investor will pay $20 for every $10,000 they have invested in the fund over the course of a year, which brings us to our first dividend ETF. So first on our list is the Schwab U.S. Dividend Equity ETF, ticker symbol SCHD. The Schwab U.S. Dividend Equity ETF SCHD stands out with its lowest expense ratio, making it an appealing option for passive investors. Focused on sustainable and quality dividends from promising companies, SCHD tracks the Dow Jones U.S. Dividend 100 Index and maintains a well-diversified portfolio across key sectors, including financial services, industry, consumer cycles, healthcare, consumer staples, and tech. SCHD is a preferred choice due to its low expense ratio of 0.6% and a dividend yield of 3.64%, along with an impressive 10-year average annual return of 11.67%. For investors seeking an excellent performing passive fund, Schwab U.S. Dividend Equity ETF is an excellent choice. Next on our list is the Invesco S&P 500 High Dividend Low Volatility ETF, ticker symbol SPHD. The Invesco S&P 500 High Dividend Low Volatility ETF SPHD constructs its portfolio from S&P 500 index stocks, focusing on high dividend yields and low volatility, primarily in value-oriented large and mid-cap companies. Real estate dominates as the largest sector, with utilities, communications, and consumer staples also playing significant roles, while industrials, energy, and basic materials have smaller positions. The fund undergoes evaluation and reconstitution in January and July. With its low expense ratio of 0.30%, a dividend yield of 4.31%, and an impressive 10-year average annual return of 8.13%, SPHD is a compelling choice for investors seeking stability and high dividend yield with low volatility in an ETF. Last but not least is our third dividend ETF, Invesco High Yield Equity Dividend Achievers ETF, ticker symbol PEY. The Invesco High Yield Equity Dividend Achievers ETF PEY tracks the NASDAQ U.S. Broad Dividend Achievers Index, holding 50 U.S. dividend stocks with the highest yields and a history of increasing dividend payments. The portfolio is mainly composed of value stocks, about 75%, with the remaining portion in core equities, covering various capitalization sizes. Utilities make up approximately 25% of the holdings, followed by financial services with roughly a 20% weighting. Over the past 3 years, PEY has shown relatively low volatility, backed by Morningstar's upside and downside capture ratios. With an expense ratio of 0.52%, a yield of 4.63%, and an impressive 10-year average annual return of 10.24%, the Invesco High Yield Equity Dividend Achievers ETF proves to be an excellent choice for investors seeking consistent cash flow payments and decent total returns. While these are just a handful of many dividend ETFs available out there, we encourage you to take the time out to learn what works best for you. If you're looking for something with more earning potential, you may want to check out growth ETFs. If you would rather buy high-yielding dividend stocks, then be sure to check out Dividend Kings or Dividend Aristocrats. Dividend Kings and Dividend Aristocrats, respectively, have proven track records of delivering dividends for over 25 years as aristocrats and over 50 years as kings. They would be another great asset to add when increasing and maximizing passive income potential. If you've made it this far in the video, I hope you found this video helpful and useful and continue your journey towards obtaining financial freedom. Simply adding a high dividend ETF to your portfolio can be advantageous as it provides a reliable stream of income through regular dividend payments from the underlying dividend-paying stocks. This can help enhance your overall returns and provide stability, making it an attractive option for income-oriented investors seeking consistent cash flow. Thanks for watching, and if you found this video helpful, please be sure to help us out by liking and subscribing to our channel